Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for May 26, 2024. And I want to say happy long weekend for those of us in the US. If you live in the UK, happy spring holiday. I believe it's what it's called on Monday. Anyway, happy 3-day weekend for those of you that are celebrating. And that also brings up something. If you listen to our daily shows, all daily shows for Forex Analytics are canceled for Monday. They will resume our normal schedule on Tuesday and for the remainder of the week. So I know a lot of you do listen to our shows every day. They are free for a few of our shows. And so just remember, we will not be broadcasting on Monday. All right. Now, I do have something, obviously you can see on the screen, something big to talk about. We have our summer sale happening with Forex Analytics. Now, if you've been listening to these videos for years, you know that we don't offer Forex Analytics at a discount, only but maybe a couple of times a year. This is one of those couple of times. That's why last week and last couple of weeks I said, hey, try out Forex Analytics, take a trial, because right now you do get a discounted amount. We are offering our pricing discount that we only do, like I said, a couple of times a year. So take advantage of it. But this time is actually very special. Why? Well, we are giving away one $100,000 trader funding program to one of the lucky winners that actually gets a semi-annual or annual discount. Now, we've never done this in the past, so we're going to do a drawing after the sale is completed. And let me just tell you, based on what I know, there's a really good chance that you could win a $100,000 trader funding program account. Now, what that is it basically gives you the ability to take an assessment, a $100,000 assessment in your demo trading. You make 10%, you don't lose more than 6% on a trailing basis, and you have unlimited time. Once you do that, you then have access to a $100,000 live trading account. Why risk your own money when you don't have to? And like I said, if you take a semi-annual or annual subscription with Forex Analytics, you are automatically entered to win. And like I said, I think your chances are pretty high in a situation like this. Now, we also have buy 1 month, get 1 month free with Forex Analytics, but you do not qualify for that giveaway, only for semi-annual and annual subscriptions. And that sale is going on until June 2nd. So make sure you check it out. Click this button where it says claim offer. You can do that and get started with Forex Analytics. All right. Now, we have a lot happening this week, so we should talk about it actually quite a bit. We are here in the US, we are going to be releasing US GDP data. Now, that advanced GDP data is coming out on Thursday, and it could signal that the US economy is slowing down quite dramatically. So that's going to have a huge impact on the dollar. We're going to talk about how to play into that if that is truly the case. We do have PCE this week at the very end of the week. We also have inflation data out of Australia, and we have the South African elections. We're going to talk about the South African rand because we've been talking about it the last couple of weeks. And remember, it is also month end. We've had strong equity markets, as you all know. We closed and continue to close at all-time highs in breakout territory, which I'll go back and reference those charts in a bit. But because of this, we should see some US dollar selling, and we actually might get some yen buying as a result. But not only because of that, I want to show you guys something, and this is, we're going to talk a little bit about the dollar yen, because actually on Sunday night or Monday morning if you live in Japan, the BOJ Governor Ueda, he is speaking. Now, he is delivering opening remarks at the Bank of Japan Institute for Monetary and Economic Studies in Tokyo. Is he going to say anything that influences the market? Maybe, maybe not. But that's not what my focus is right now. One of our colleagues, K-Man, he doesn't think that Ueda is going to say anything that could really move the needle much. But I want to show you guys something. Whoops, I didn't mean to do that. I wanted to show you guys something on the dollar yen. All right, so looking at, these are our charts from the week ahead video. You guys know, because of the 618, the respect of the 618 retracement, and I'm just going to delete it so we don't have to see it right now. That just shows you how vitally important this level is in the market. We all know that as long as we're above 152, you know, the dollar yen remains bullish, right? Now, what you'll notice if you zoom in for the dollar yen here, okay, you see that we are respecting a 618 retracement. You can see right there, right here, and you can see right there, we are rejecting that 618 retracement. But in the event that we break out, I would think that buying might be a little limited to the 78% retracement, which would be the 158.50 level. Now, why do I think that it's possible we get up there? Well, first of all, it's a Gartley pattern, but more importantly, if you look at the 10-year JGBs, and let me get over there right now. Okay, you get the 10-year JGBs, and then just put. You can see that it is breaking out. Right this is a 4-hour chart, bullish breakout. Here's the thing. You are seeing the let's go ahead and put up the dollar yen real quick. You're seeing that there's a very strong correlation between the dollar yen and 10-year yields. But here's the thing. Monetary policy is changing, and we've seen, and let's just look on a longer term basis. You've seen a very big and strong positive correlation between the two, but that has been an environment where the Bank of Japan and the Ministry of Finance is basically the Bank of Japan has basically kept rates low, at zero basically forever. And now the BOJ is finally starting to make a move. So with the 10-year JGBs actually breaking out, I could argue that the yen might actually start strengthening sometime soon. So we would see a departure from this correlation that we've seen for so many years. Now, for like 20 some odd years. Let's go. Let's see if we can pull up. Let me delete. Whoops, not that. I'm going to put up something else here. And let's add the 6J. There you go. There's the 6J. And you'll see that, yeah, we've had, obviously this is a very negative correlation, but that might actually change. It might actually change because monetary policy changes from the Bank of Japan just over the last few months. So as the 10-year breaks out, 10-year JGB breaks out, we might actually start to see the yen strengthen soon. Now, if that sounds all fine and dandy, but the reason why I point all this out is because if you look at the dollar yen, it might start strengthening here. Let's go back to the week ahead charts that I draw on here, or we start turning from the 78% retracement. So I think that the dollar yen is getting close, the yen is getting close to strengthening as a result of the breakout of the 10-year yields, JGB yields. Okay, so just keep that in mind. Now I want to continue on because we got a lot going on this week. Monday, by the way, Monday out of Norway, we have unemployment. Let me get rid of my video here. We have Norway employment. Okay, unemployment, So let's take a look at the US dollar Norwegian krona. I want to show you guys something really important here. We were looking for a breakdown, obviously, in the US dollar Norwegian krona a couple weeks back. We got that, but I'm going to give you the buts here. Let me just show you something here with the US dollar Norwegian krona. We are really probing what could be channel support. So, and you can take that low right there across the tops right here. Okay. Now, if we break down because unemployment isn't as bad as expected in Norway, that's possible. Then next thing you know, we are going to be trading down towards 1040. We are below the 618 retracement. However, you can see that we're really close to the 50% retracement, more longer term channel support right here. And with unemployment coming out Monday morning in Norway, but it'll be Sunday night, that is potentially a risk for this market because there'll be not a whole lot of liquidity in the market. So if unemployment starts to tick up a little bit, we could see the US dollar Norwegian krona reverse. All right, so just keep that in mind. I think that we're at a very critical place for the US dollar Norwegian krona. All right, moving right along, Monday, like I mentioned, it's a US and UK holiday. Monday night or Tuesday morning in Australia, we have retail sales. Now, We talked about the Aussie being really key resistance this week right there, and boy was it. I mean, we came within striking distance of that level, and we showed a bit of a reversal. Whoops, I didn't want to delete that. I wanted to delete the green line here from last week. So as you can see, we rejected pretty much where we needed to. Now, there's two things happening in Australia this week. We have the retail sales that are happening on Tuesday morning, and then Wednesday morning in Australia, we have Australian CPI. Both of those could be a really big mover for the Aussie dollar. But there's another thing that's happening. Well, equity markets are at all-time highs. Usually that keeps the Aussie dollar bid. One of the other things that's happening that you might not have seen is copper is starting to show a reversal. So copper starting to signal a reversal might actually weigh on the Australia to the downside. So I want you to keep it. We're going to go into copper in a little bit, but I want you to guys just to be watching this really key level of resistance. I think support. Obviously, if you look at where we rejected the 618 retracement. Let me get rid of my video here. There's a 200 DMA and the 50 DMA not too far away. I believe this is all going to be pretty good support on the way back down, but we could break those levels, especially if you're watching what's happening in copper right now. All right. Also, early Tuesday, or I believe it is Tuesday. Let me double check the time here. Out of well, it's actually Monday night, so it'd be Tuesday morning because he's in Japan. Swiss National Bank Jordan, due to participate in a panel discussion titled Policy Panel Discussion at the Bank of Japan Institute for Monetary and Economic Studies, also in Tokyo. That's where UAID is going to be. You got to watch this US dollar Swiss franc because, let me delete this blue line here. The US dollar Swiss franc, in my opinion, is flirting with really big resistance. Okay, not only do we have this channel, but we have like these near-term highs, because the fact of the matter is if we start breaking through this resistance here, you're going to see the dollar Swiss, or really the Swiss, really starting to weaken quite substantially. Now this has been, if you go back to the end of last year and the beginning of this year, this is one of the trades between this and the Euro Swiss. These were the trades basically shorting Swiss franc that made most of my first quarter in profits. And we talked quite substantially in December, in January, and in February about being short Swiss francs. And guess what? That trade could continue even further. I am short Swiss francs in across. You would know that if you're in the Forex Analytics chat rooms, right? If you're in the Forex Analytics chat rooms and you go to the trades rooms, you'd actually understand what positions I'm in because I talk about them there. So I'm not going to do that here for you guys, but remember, if you join Forex Analytics, just go into the chat rooms, go into the trades room, you can see what position I'm holding. I am looking for continued Swiss franc weakness. Now, I don't think this is going to be the catalyst that drives us up here, but I do believe that this is going to be a very, very influential, or very key level for the dollar Swiss moving forward. Okay, remember, Swiss National Bank Jordan, he is speaking actually on Monday, so just keep that in mind. All right, let's talk about Tuesday. Tuesday, we have U.S. consumer confidence. We have the U.S. house price index. We have 2- and 5-year auctions that are happening in the U.S. as well. So coming back to Tuesday, full force coming off of the holiday. Let's take a look at the dollar index and let's just kind of see where we're at. So the dollar index, you'll notice we are holding the 200 DMA for right now. Let me get rid of this and that trend line. Let me just mention something real quick. Most of you all know this. I reserve the week ahead charts, the charts that you see off here to the right. I reserve those for this particular video. But there are a few instruments, one of them being the dollar index, that I use during the week ahead video, or during the morning edge, during the F.A.C.E shows. And so I use a different set of charts intraday, but for the week ahead video, usually I only leave the charts Here, we just touch them every week. So this way you can see what had happened from last week to this week. Okay, I do that specifically so you can, understand my thought process and kind of what's happening from week to week if you're not listening to our shows every day. But the dollar index is one of those charts that I do update throughout the course of the day. I update it in the Forex Analytics platform too when you're looking at intraday charts and basic technical analysis. If you see the intraday charts, not right here because these have already been updated for the weekend, but you'll see my charts that I'm constantly adjusting here. So with that being said, the dollar index, notice how we're in the middle of our triangle, big triangle here. 200 DMA is holding. We've talked about all week long. We've talked about all week long about in Forex Analytics about how important the 104 to 105, basically 104.10 to 105 levels have been in the dollar index. And you can see the 105.10 level has offered really strong resistance. 104.10 is support, but really I'm more concerned with this channel now and the 200 DMA. So I do think that this is going to be really important support for the dollar this week. And also, let's get rid of this fib here. We don't need this one for right now. If we do get a breakout above 105, 105.10, also note that this is a 38% retracement. Actually, let's do this. It's a 38% retracement right here at 105. So a break above that would be very, very bullish near term for the dollar index. Now, how could that happen? Well, we get past the end of month, all the flows, or perhaps the GDP data comes in stronger than expected. All right, we'll talk about that here in a bit. All right, so anyway, just watch the dollar, especially with all that data coming out on Tuesday night, or actually Wednesday morning in Australia. We will see the Australian CPI. Now, I've already talked about the Aussie dollar, so I don't need to rehash the Aussie dollar. I do want to talk about the Aussie Kiwi, though, because obviously I haven't shown you guys this chart in a while. We were talking way back here about a break above that level being bullish. Well, it was for 2 weeks, right? Then it's obviously reversed. Now, here's the problem with the Aussie Kiwi. You see the 200 DMA right here, right? Also coincides with the 50% retracement. The fact of the matter is, if Australian retail sales come in weak, if CPI comes in showing some disinflationary data, the Aussie Kiwi could really break down here. So just keep in mind that this is a pretty aggressive move, and frankly, if you look at it from a pattern standpoint, it's got some downside still in it on a breakdown. So this has been a very, very impulsive move here, and it could really pick up some steam, obviously, to the downside. So just watch that Aussie Kiwi this week. Also, Monday night or Tuesday morning in Tokyo, Jordan, Swiss National Bank Jordan is also participating in that policy panel discussion at the Bank of Japan. So just keep that in mind. And by the way, let's talk a little bit about the Euro Swiss and just recognize the fact that we are in breakout territory and we have finally completed that butterfly pattern that we talked about. This pattern, we drew that out in December or in January of this year. So we drew that out way back here. I guess in February. So we have now reached that target at the 78% retracement. Now that doesn't mean it's done yet, but I'm thinking that parity, which is just right over here where this green line is, it's not very far away, and a lot of people are going to be targeting it. So just keep that in mind as we move along throughout the course of the week. All right, so that was, I'm sorry, that was Wednesday. I'm sorry, I misspoke because Jordan, who's speaking Monday night, Tuesday morning in Tokyo, that's before all that data. He speaks again Wednesday night, which will be Thursday morning I'm sorry, I skipped over a little bit of where he was going to be. But he will be speaking again on Thursday. All right, going back into what's happening on Tuesday night, Australian CPI. Wednesday, we have South African elections that are happening on Wednesday. So on the 29th, we will have the US dollar, South Africa, or excuse me, the dollar rand will be in play. So we should probably talk about that. Now, we discussed last week on a break above 1830, we would get a squeeze. We did. All right. Now the question is, what's going to happen with the South African rand from here? Just remember that the base case right now is there's going to be a coalition between ANC and DA, which is the Democratic Alliance, right? So and the fact of the matter is that coalition will probably not get a huge impact in the FX market, but it might be a little bit rand positive. So in other words, we might see this happen, okay? But in the event that the ANC gets a majority, we would see an actually aggressive move lower in the US dollar South African rand. Now couple that with the end of month selling that we might get in the dollars, in the dollar just as a whole, the US dollar South African rand could be at risk of a move lower. Now, what's going to technically, in my opinion, what's going to change that view would be a move here. Let's grab this blue line and say a move above here, which would be 1868, would actually mean that we are going to see a very big move in the rand. Oops, I did not draw that. Arrow didn't come out. A very big move in the rand lower. So that means the dollar rand would continue this upward trajectory. But it does look like to me that we are trying to carve out a major top in the dollar South African rand, or a major bottom in the rand in general. So just be watching the dollar rand this week. It is going to be chock full of volatility. All right. Also on Wednesday, we have German CPI. We should actually go back and reference the euro really quick because we don't have a lot of European data, but we do have some inflation data out of Europe. So the euro, as you can see, is still stuck in this right in the middle of the triangle that we drew last week. So let's delete that. Let's delete that. Let's delete this. Let's delete that. And let's delete that. Okay, so again, we're smack dab in the middle. What's most important right now is this 200 DMA and the 50 DMA. Now let's delete this Fibonacci retracement and let's talk about how shallow the move has been. So if the euro can hold this 38% retracement, you can see it right there, and the 200 DMA, the risk is that we'd get a breakout above 109, and then that will allow us to challenge that 110 level again. I think that is the prevailing risk at the moment, especially with European inflation data coming out this week. It could come out a little stronger than expected. Also on Wednesday, we have 7-year auctions here in the U.S. On Thursday, we have Swiss GDP. We talked a lot about the Swiss already, so that's another thing that's happening this week. Like I said, we have European CPI. Now, we also have Mexican unemployment rate. Now, the dollar MEX has been finding a little bit of support, and I'm going to draw something for you really quick on this dollar MEX. I'm going to draw it the same way that I draw it on the F.A.C.E show. Okay, you can see a little bit of support here on this previous trend line, and let's delete this. We don't need that right now. And you can see we're basically holding, trying to create a lower or higher low, excuse me. So what that means is any type of recovery here should be capped around the 200 DMA or around this 38% retracement. But I think the risk is right now that the dollar MEX might see a little bit of a recovery back above 17. So I think that's where we're going right now. Also keep in mind that we do have, like I said, Mexican unemployment on Thursday. Now on Thursday, we also have that U.S. preliminary GDP data. One of the things that we should probably be looking at, aside from the dollar, we should probably look at what's happening in 10-year yields. So I'm just going to, I do want to reference what's happening in the bond market, but let's look at the 10-year yield here. Okay. You can see that the 10-year yield has found really key support at the 38% retracement. So if the data, that we have, like US GDP data, is strong, yields should continue to rally. And given the fact that we found support at the 38% retracement or just below it, but also previous highs acted as current support, that has allowed a rally. So on strong data, we should continue higher in the 10-year. Now, obviously, if the data is weak, then we're going to try to make a lower high in 10-year yield. So just keep that in mind. All right. We also have unemployment claims, which the market's been focused on, pending home sales. Thursday night, we have the Tokyo CPI. We also have China PMIs that could really move the market there. On Friday, we have Eurozone, core CPI, Canadian GDP. We should probably talk about the dollar Canadian really quick. So we have Canadian GDP and then the US PCE data as well. So let's talk a little bit about this dollar CAD, because we were talking about a really big pivot off that 136 level. That happened. Now I'm going to, whoops, I didn't want to delete that. I want to delete this arrow. Let me show you something that I thought was pretty important on Friday. If you were listening to the F.A.C.E show, you knew this. We rejected actually the 618 retracement on Friday. Actually on Thursday, but you can see on Friday the even despite the weak Canadian data. Here, let's take a look at what happened on Friday, because if you didn't see it, we had the weak GDP. I believe it was GDP on Friday. Canadian. Oh, it was retail sales. I'm sorry. Despite the Canadian retail sales that were weaker than expected, the Canadian actually strengthened. And here we are at the 50 DMA. Now, I would venture to guess that this area that you see here in the Canadian dollar is really the range that we're dealing with, 137.50 to 136 as support. I think you need to play within that range for right now. Now, before I get into what's happening in gold, and what's happening in copper and crude and the bond market and what's happening in the equity markets, let me just mention this once again. If you haven't, and you kind of skipped through it the last time, remember, we do have our summer sale happening with Forex Analytics. Make sure that you take advantage of it, because we only offer sale prices a couple of times a year. But most importantly is if you get a semi-annual or an annual subscription, you'll be entered in a drawing to win one free $100,000 trader funding program account. And we've never done that before. And like I said earlier, your chance of winning is going to be pretty high when you're talking about a drawing amongst, only so many people. All right. So with that being said, I want to ask you, if you're finding these videos to be very important and you like them, make sure you give us a thumbs up. Especially it's Memorial Day weekend. It's a 3-day weekend, and it's Saturday morning, early morning, trying to get this video out for you so you're prepared for the next week. So if you appreciate it, thumbs up. Jump down in the comments below if I missed anything this week, or you don't necessarily agree with some of my analysis. Jump down in the comments below. That really helps out the YouTube algorithms. All right, continuing on. Let's move along to what's happening in gold. So gold, big development this week. We are at risk of a potential double top now. Now, I know we did a higher high. I get it. We did. Whoops. That's not what I wanted. All right. I get that we did a higher high, but what did we really do? We rejected this long-term channel. Now, you guys remember this from last week. I said, hey, here's the lower end of the channel. If you just connect the previous all-time high way over here to current levels, that is going to reject us right around 24.50. Well, the problem with the gold market is the gold market has come off quite aggressively this last week. Now, I'm not going to write off gold just yet, but I am going to delete this. I'm going to delete this. I'm going to delete this, and I'm going to delete that. So not only did we get a potential double top, but you also got a false breakout to the upside. Now, if gold breaks this level right here, we will then measure a double top. That's not what I wanted. We will then measure a double top that would look something like this. Now, I'm trying to think about what is the world that we live in that could allow for gold to really weaken like that. And my opinion is probably positioning. I have a lot, and it's very anecdotal evidence, but I have a lot of people that don't normally invest in the markets that are just asking me about gold. They're buying gold. They're asking how they can buy physical gold. That's happened a lot over the last couple of months. And Costco's selling gold. Costco is selling gold bars. They're constantly sold out. So it just tells you how retail gold is right now, which never is a good thing. And that's some really strong evidence that we could see a near-term pullback. It doesn't mean that gold's bearish. I just believe that that it might give us a better opportunity to buy gold at a cheaper price in the weeks ahead. So just think about that. Also, I want to talk a little bit about copper. As I mentioned earlier, copper, I believe, is reversing from a very, very key level of resistance. Not only was it the previous all-time high, but we did get a false breakout. So now the risk is, and let's delete this, is we get a little bit more of a severe pullback in copper. Now, like gold, I believe copper is actually quite bullish. So I would look for some sort of dip, maybe to the 50 DMA, to offer support, for a continuation higher. For a continuation higher. There we go. But we might see a bit of a sell-off in copper as well. Crude oil. Crude's in a very tight range, as I've mentioned the last couple of weeks. But what we should note is that we kind of made a false breakdown here on Thursday, Friday. You can see right there. That's a bit of a risk. Now, that doesn't make me bullish. I'd like to see a move above the 200 DMA. I just think that this is potentially still a very tight range, ready for a breakout. Speaking of false breakout, we mentioned over the last couple of weeks with the 10-year, we had a false breakout up here above the 200 DMA, and that channel is intact. So you can see this descending channel could mean that bonds continue to come under pressure, yields rally, dollar might reciprocate with a rally as well. All right, we don't have Grasshopper Nick. He's not going to be joining us today. He's been out this week. He's had some things he had to take care of, so he will not be providing his 3 minute video on the markets, but I'm going to go ahead and go through some of the markets for you. So if you look at the S&P continues to break out. Now, the fact of the matter is the S&P closed above the breakout point on Friday. So we had a little bit of a slip on Thursday. We recovered on Friday, but I still am going to say that this bearish outside day or bearish engulfing candle or whatever you want to call it, I think it has repercussions. So with that being said, I want you to just keep your focus on the S&P, whether we sustain the breakout or not. Remember, everything that you're seeing in the S&P is happening on very, very light volume. And so this light volume that we're seeing in the S&P I think is very concerning for the equity markets rally just in general. Now take a look at the NASDAQ 100. The NASDAQ 100 continues to press higher. We had strong NVIDIA earnings on Wednesday of this last week. That's keeping the NASDAQ 100 pretty strong. If you look at the Dow's underperforming, could be setting up a double top. So I think what we probably should do really quick, let's just highlight the fact that we might have a double top up here in the Dow. I wouldn't get too excited about that unless you get a breakdown below that level. That's where I really start to get worried about the Dow. And then we should probably also reference the Russell 2000. It continues to show signs of weakness. You can see, is that still a head and shoulder pattern? Potentially. I still think it's trading really heavy. It's one of those markets that just cannot rally, even with stocks at all-time highs, the broader markets. Now we should also take a quick look at at Bitcoin and Ethereum. So Ethereum has an ETF that was gosh, we haven't looked at this in a long time here on this chart or here on this show. So Ethereum rallied on this ETF approval. It's now done. Here's the problem that I find with the Ethereum market is, well, if that is what the market was looking for and we got it, we didn't get a new all-time high. So now you have to look at this chart and say, okay, well, are we developing a longer term consolidation in Ethereum? I would be very hesitant about being long Ethereum while we're below 486. Or maybe the other way for me to say this is, if we break above 4,100 in Ethereum and you're long, maybe you can feel comfortable about owning it. I would have a hard time sleeping while it's trading below 4,100 as a trader, not as an investor. I'm talking as a trader. So just keep that in mind. We're trying to create a lower high. Now that the Ethereum ETF news is out, what do I have to look forward to? Now, Bitcoin, we'll talk a little bit more extensively in the review when we do the review of Bitcoin, but it is also still stalling at the 70,000 level. It really is struggling to take out new highs. And one of the risks to Bitcoin is that with Ethereum ETF, it might take away from some of the Bitcoin maximalism that is surrounding Bitcoin, where you get people say, wait a second, there's, maybe Bitcoin isn't the only cryptocurrency that will exist in the future. Maybe there are others. And so you might see some selling of Bitcoin and some of that money moving into Ethereum in the very near term. So just something to be thinking about. Excuse me. All right. So with that, all that being said, this is the point in time where I'm going to go over the setups that we talked about last week and review those. And then I'm going to give you my best 3 trade setups of this week. So first and foremost, short Bitcoin while below 68,000. We were just talking about Bitcoin, so let's do it. All right, so it did rally beyond that. Obviously, the ETF news, the Ethereum ETF news allowed for a further squeeze. So it didn't work. So that one just didn't work. But I'm going to tell you this right now. Based on that information that we got, I redrew our charts here. And I redrew the flag that looks something more like, well, it could look like this, or maybe it looks more like this. Okay. But I'm redrawing everything in Bitcoin. And I still think we're developing a flag. I still think that we are struggling as we are making new highs. So I still think that if you happen to be looking for shorts here, I think Bitcoin could still roll over. Remember, it is stalling at the previous all-time highs. So this one didn't work from last week, but I didn't know that Ethereum ETF news was coming out either. All right, next one, short Swiss yen while below 172. Well, we're still trading below 172, and I still think this one is a work in progress. But and let's go over to a 4-hour chart, and let's talk about where we were at last week. So last week we were here, right? And this gave you not only 1, 2, 3, 4 different opportunities to short basically the Swiss yen at 172. So if you just continue to play into that, great. I think it's still working, and I think it's something you can still do. All right, so 1 win, 1 loss. Last, US dollar South African rand. Buy a breakout above Friday's highs at 1830. So obviously, and just so you guys know, I missed this one. Personally, I totally missed it. It kind of fell off my radar at the end of the week. But what you'll notice is once we rallied through 1830, it allowed for a squeeze up to 1850 and change. So, and it's still holding above 1830. So if you guys played that was a winner. So 1, 2, 1, the Bitcoin didn't work out, but I still think Bitcoin has a really good chance of slipping back towards 60,000 or maybe even a little bit lower. So anyway, those are the setups from last week. Let's talk about my 3 favorite trade setups from this week. So first one is buy the euro dollar above 109 and target 110. And then there's a little bit of special bonus here. If we stall at 110, I'm actually going to be looking for a short. So I'm looking to play it on the long side and then look to trade it on the short side, thinking that that triangle is still going to hold up. One of the things that we need to be thinking about in the months ahead, and I don't think this is the week nor the month that we need to be thinking about this, but I do believe eventually the euro dollar is going to break out to the upside. So I believe at some point we are going to see a breakout above 110.10 in this case, or maybe we might get down here and break out when we're down here. That's entirely possible, right? But I don't think it's going to break out just yet. That's why I'm saying that if we get a rally above 109, I want to play it to the long side, because this. Let me just show you. Let's go to a 4-hour chart. Let's do it like this. You guys can see exactly the charts that I'm looking at on basically on the daily shows. And by the way, if you don't know how to get to our daily shows, all you have to do is go to the webinars page. You can sign up for the Flow show. You can sign up for the F.A.C.E show. Be there every day. You're going to hear myself and the rest of the team talk about what we're trading and what we're doing and what we're looking at and the charts that we're looking at. So in this case, looking at the euro just like this, and if that flag pattern wants to play out, that flag pattern should get us really close to that 110 level. So a completion of that bull flag pattern is what I'm really thinking. All right, trade setup number 2. Sell US dollar Japanese yen on a spike to 158.50. So I already showed you very early on. I am looking for a move to 158.50. Let's delete that. And I'm looking for a short up there on the US dollar Japanese yen. Hopefully, we get that opportunity as we come closer in the week into the end of the week, because I think that the end of the month, because I think the US dollar Japanese yen, the US dollar should see some selling pressure against the yen. Okay. Last but not least, the third. I want to short the S&P. Let's find the S&P chart. I want to short the S&P below 52.35. Actually, I think it's going to be right here. Yeah, it's basically right here. 52.38, 52.40, 52.35. I'm going to write down 52.40. All right. I believe that we've seen a bearish outside day right here. I think that the risk is that we start breaking down, but I'm going to wait for a move below 52.40. Then I'm going to look for shorts in the S&P. As you've heard me the last 2 weeks, I think that this equity market rally is unsustainable. Relative strength is very divergent. Technically, volumes have been very anemic in this rally. So I think that selling is going to pick up steam below 52.40 on the S&P. So I'm looking to short a break below there and only there. All right. With that being said, I want to say, guys, thank you so much for spending your time with me. Remember, take advantage of this offer. A, to get involved in the giveaway, but B, you don't see these prices but a couple of times a year. So why wait? And why not be involved in one of the most active trading communities right now when the volatility is expected to rise in the market? So with that being said, I hope you enjoy the remainder of your weekend. My name is Blake Morrow. I will see you on Tuesday morning on the F.A.C.E show. Thank you for spending your most valuable asset that you own, which is your time. Thank you for spending it with me. I do truly appreciate you. I'll see you on Tuesday. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.